Good morning, everybody. Campbell McCrary, Amvest Capital, New York City. Stratabound Minerals today. Stratabound trades on the venture as SB, as in Stratabound, and as SBMIF, as in Stratabound Mike Indigo Foxtrot, on the OTC. Hope you'll enjoy today's program. It will be available in replay mode about an hour after we wrap up. You can find it at amvestcapital.com/replays, which is the side page of /webinars, amvestcapital.com. Feel free to chat in your questions in the question pane of GoToWebinar, or simply email them in, and we'll ask the questions in real time. Again, Amvest, New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Very important, this call is for informational purposes only. Presenting today, we have with us Kim Taylor, who is the president, CEO, and director of Stratabound, a professional geoscientist by background. He's a mining and exploration professional with over 40 years of progressive management and executive experience in gold, base metals, industrial minerals with such companies as Vale, Rio Tinto, Royal Oak Mines, and Cominco Limited. He was awarded the Developer of the Year award in 2008 by the Northwest Ontario PDAC chapter. Following the formal presentations, again, we'll be asking questions. Please send in your questions using the chat function there, and we'll have a nice engagement with Kim. So, Kim, if you want to share your screen and turn on your webcam, we'll be in good shape.
Okay, I do believe it should be sharing my webcam.
There we go.
There we go.
Full screen mode, and I'll see you in about 15-20 minutes, whatever you need.
Okay, I'm going to try and share my screen. Thank you, Campbell, and thank you, Amvest, for having Stratabound present their story today. And here we go. I'm going to try and launch into this. Hopefully, I'm not sure. Are you seeing my screen? Sorry about that. I'm not used to
your screen. Click on the slideshow and from beginning, or the slideshow icon at the bottom there.
There we go. All good? Front page of the slideshow?
All good.
Terrific. Okay. All good. All right. Just going to minimize this so I can see what I'm doing here. Terrific. Thank you very much once again. So quickly overview here, some of the information already passed on by Campbell, but gold, copper, cobalt, exploration, Yukon and Maritimes. And the big story for us that we're going to focus on is the recent expansion plans into the Motherlode Gold District of California. We're going to become an international company and working hard to be a production company as well as an exploration company. And the forward-looking statements were required to tell you that that there's obviously forward-looking here. There's no certainty of anything, but we're working hard to make it happen. So overview: 2 high-grade gold exploration assets. We have the Golden Culvert in the Yukon. That's been our flagship property all this time since about 2017 when we acquired it. Recently, last summer 2020, results up to 320 grams per ton on surface samples. We also have a project in New Brunswick. It's a project we work on when it's in the summertime. It's an early stage one in a new area of New Brunswick where gold is just starting to be opened up. And we have a legacy project, a copper-cobalt one in New Brunswick that's coming for a number of years. We did some drilling last year too. You can check our website for the results on that. But we do plan on looking at that as a small micro mining project where we can direct ship high-grade copper and cobalt, and with some gold value to it. It's very close to an Atlantic seaport near New Brunswick, near Bathurst. And on top of that, our team, despite the fact we're into exploration projects, we're actually assembled and we're actually miners. My background's been in the mining industry for most of my career. I live in Sudbury, Ontario, worked for Inco when I was a young fellow in high school through university and got the bug and carry on forward. We've been operators, and although in exploration, we really see the opportunity here to build the next mid-tier mining company, or have a heck of a lot of fun doing it. We just raised a lot of money last December, about 8.7 million, so we're well financed. We have no debt. And the big news is we've been looking in the California Motherlode for 5 years and had several opportunities, and finally got clicked into one with working together with the California Gold group of folks, and an excellent bunch. And we're looking forward to all working together to build a mining company and working in California. So I'll go through these early slides rather quickly. I know I've got limited time here, and you can find more information on the website. But here's where we're located in the Yukon. BC border just down below here. The key aspects of our property is it's on an all-season road. The old Cantung Mine Road is just right here. That's accessed. There's places in Ontario that you have to get in by helicopter, so we've got that work in our benefit. We've also right close to the Seabridge Gold Three Aces project. That was a 5,401 gram per ton discovery back in 2003. We have a 10-year Class 3 exploration permit to the year 2026. This is unique in anywhere on the planet where you're going to get 10-year exploration permits. Typically, the 1 or 2 or 3 years, we're good to 2026. Our plans to do drilling and trenching, whatever we might do, is all included in there. Very low exploration cost despite the fact we're in the Yukon. And the zone considers multiple gold-bearing zones with a 130-meter wide gold corridor up to 970 meters of strike. Next slide down here. I won't dwell on this one either. Again, a lot of information on here, but basically a lot of work's been done in the short time period we've been in there. We've got drilling, we've got trenching, we've got surface samples. It's looking pretty good. Our best value to date is 95 grams per ton in a trench over 1.5 meters, and that's within a broader zone of 24 grams over 6 meters. This is the work done last summer. It was intriguing to go in there and sample on the surface. We're in an area that had not been continental glaciated in the great ice ages. This is the land bridge to Asia where the first indigenous people crossed over. And so what that means is a lot of the surface sampling you do is literally stuff that just decayed right above you in the air and eroded and it didn't get swept away by glaciers. So this summer we decided to sample. And if you look at the colors of the results we got, and again, press release more detail here, but we got everything. The turquoise and up is open pit grade, and everything in the red would be underground type of typical grades for underground. This is lying on surface, and like I told my folks, it looks like I was walking on a muck pile in a mine here, just literally sitting on naturally created. So enough of that. We'll talk about our project in New Brunswick quickly. This suture zone going through here is where continents collided about 450 million years ago. And when they did, all along this suture zone, this is one giant continent back then, which have subsequently split apart. But all along it, you've got gold properties, Conanish, Dalradian, and a lot of excitement here, maritime gold, newfound gold, of course. Everything old is new again. People looking in here and across the border, and this suture takes you right across. Not a lot of work done in New Brunswick. Not a lot up in here. This is just new. And if you follow it all down through here, you'll see Ridgeway and Hale owned by Oceana Gold. And you'll wonder why people haven't looked, and if they haven't, maybe there's not much news on it. But here's where I take my pitch and steal from Wayne Gretzky and say, Stratabound, in our time, we're going to go where the puck will be next and not where the puck is. And that's where we feel Northern New Brunswick is. Our another company, only other company up there doing anything of work is Puma, and you can look up them as well and see they've got pretty good results as well. So new early stage project. Quickly touch on this one. We've just done soil sampling and the results will be coming out in the news shortly in this blue area. And in 2020, we picked up all the brown. Here's what I talk about Puma exploration. They've got recent news out too, but they've got to up to 109 grams per ton. Highway runs right through the property. And our last project quickly, our Captain Copper-Cobalt property. We're very close to the Brunswick number 12, number 6. These are world-class deposits, 136 million tons. Big VMS deposits. We're right on strike, and we have a small copper-cobalt property on there that we've been working on. Some quick analysis results. Again, I won't dwell on this too long. Very high grades, 3.3% copper equivalent, 2.3 and so on, over 3%. That's what we're looking for. A small scale open pit mining project that we can get into production in a year or two and start earning cash flow in the company. Finally, let's go to talk about California Gold and what's going on there. We intend to build the next gold developer and producer through combining skills, financial support, and pipeline of assets of both companies. What was the rationale? We planned to build a pipeline of early stage through operating. We had the 2 early stage, more advanced project with in the Yukon and a less advanced one in New Brunswick. But we've been looking in California for 5 years, I said, and dispelling the myth about how difficult it is to work in California. I've been down there myself. I've looked at properties, and finally we clicked on this one with Fremont and California Gold. They own 100% of the Fremont Gold Project. The addition of the Fremont provides for a quick to production opportunity to finance and advance the early stage assets, which is less dilution to shareholders than going out and raising money on the markets. It's always not, that's the most unpleasant part of my job. I'm afraid I'm an operator and a miner and a promoter last. And although it's part of the job and it's easy to talk about things I like to do, this is fun, but it's hard to raise money out there. There's no doubt it's the most difficult part of the job, even at the best of times. So the idea here is the best thing to do is be a company that earns its own way and gets cash flow going, and that's our plan. Even with the small scale in New Brunswick, that's another way of providing cash flow in the company. Fremont's located in the famous Mother Lode Belt, gold belt. It's 50 million ounces. I cut my teeth and spent 15 years working in the Abitibi as a chief mine geologist at the Pamour mine in Timmins. And this is another Abitibi as far as I'm concerned. The fun part of California is that things pretty much, it was chugging along since 1848, and things shut down in the Second World War when the War Measures Act came in and the boys went to fight the war, and a lot of these mines never started up again, and they shut down when gold is around $20 to $30 an ounce. So these are the opportunities that Stratabound looks for. Why were they shut down? Well, it didn't have because they ran out of gold, and it didn't run down. It ran down because of a variety of other reasons that aren't really have anything to do with the quality of the project. The Fremont hosts features an NI 43-101. Right now, Stratabound has now 43-101 ounces. We do have pounds of copper and cobalt in our 43-101 resource statements, but we do not have gold, and that's where we want to go. The quickest way for us to go there is we could continue on exploring our projects, but that'll take time. And the quickest way we knew is to search out and merge or amalgamate or somehow work together with another company who needed the technical skills our team has and cash, but had a very good quality project. And that's what we saw against Fremont. So nearly 1 million ounces of indicated plus inferred. And I'm supposed to split those up. 500,000 of those are indicated, and another 400 or so, or 380 or so are in the inferred, of an average grade of 1.6 grams per ton. We want to grow the company, and I said to my board last year, I said, okay, guys, we want to be a 100 million market cap junior gold producer. How do we get there? And we saw we had to be up amongst the peers that are 100 million market caps, or guys that are going to have 1 million, 2 million ounces that are producing and have cash and working towards that end. So that's where we are going to work towards and see if we can get the company into 100 million market cap without having to go to the market and dilute any more than we have to. Certainly, you're going to have to with a merger, but that's okay. That's not a bad thing. Here's where it's located, where Fremont is here. You're wondering, again, the myth about working in California. Equinox is a classic example. Ross Beatty Company, they're doing very well with heap leach in California. Now, there's going to be permitting concerns, and companies have to be responsible socially and environmentally, and that's our plan too. We figure there's not only is it the right thing to do, but there's value in becoming a green company and doing as best you can. But in California, you're dealing with counties, and it's a lot easier to work politically and regulatory-wise than in my home province of Ontario, where you have to work with provinces. It becomes very clunky and hard to work with. So in that regard, we see we're in a good belt. That belt runs right up through here, Shasta Gold right up through here, and Equinox actually owns Castle Mountain. The other thing about Fremont is a former producer, 2 former connected producing mines with shafts, multiple adits, a lot of good information we're able to access and work on, and this is some of it here. This long section shows where the existing resource of the 515,000 ounces and the 364,000 ounces of inferred are located in roughly this dashed blue area, and you're seeing all the drilling focused around this. What I found right off the bat, and looking at a long section, this deposit went down quite a distance when they mined it back to 1944. It shut down in 1944. Produced 126,000 ounces at 0.233 ounces per ton, and that's what you're seeing shaded in gray. But and the drilling recently in recent years has been focused near surface, and as it should be, to see what you might have for an open pit. But it intrigues me that even right here, you've got 10, 15, 20 gram material in the old historic sampling that was done. It wasn't included in the 43-101, but it's a clue. You got something happening. What's going on down here? On top of that, this area was drilled in 2012. It's called the Queen Specimen Zone. About a dozen holes or more drilled in here. All very good results, very similar to here. But what's in between? It never got drilled. And the same thing over here is Chicken Gulch on the far end too. Also very good grades, very similar to what you're seeing in the main area here. So this is nearly 1 million ounces right here. What do you have down to here, and what could possibly be out here? So we see a tremendous potential for adding ounces and building a very significant mining operation here. It's getting me to the end. I've got some information here on our company. We got 89 million shares outstanding. We'll be acquiring about 65 million shares in the business arrangement with California Gold. That'll put us about 150 some million shares out. And our market share prices was 20 cents. It's been bobbing up and down between 20 and 18 cents in the last few weeks. Market cap right now about 17.8 million. an average daily volume of about 130,000 shares. So for California shareholders, they have seen very little volume. We get quite a bit. We have cash, we have the team to build it, and we're hoping that the folks in the California side see this as a good opportunity for them, for a team to work together. It's basically a marriage where we're going to build a significant mining house, we believe, down the road. Finally, thank you very much. I've gone through that fairly quickly, and hopefully I kept in the time limit I had. So now I'll hand it over. If there's any questions, be happy to answer them.
Sure. Will you allocate the funds between acquisitions and exploration efforts? What goes into your acquisition strategy, Kim?
Well, number one, it had to be an all shares deal. And that's what we got, is an all shares deal. I'm a cheapskate, and I've lived in the juniors long enough, and I've been accountable for my budgets as a junior miner for tough to operate companies. That the Palmer was one of the toughest mines to operate, and it ran on a shoestring, and I've learned that a long time ago. So cash is important to hold on to. A lot of our funds we raised came from the US, they're not flow through, and that's another interesting thing why we hooked into the OTCQB. But again, it's holding on to our cash. The shares is the way we want it to go. Going forward, we have a budget. We worked out a budget, a plan, what we're going to do with California Gold. It worked. We could fit it in. I will say that one thing we tried to do and weren't successful is there's debt that comes with it. And that's a question people will ask. There's about 3 million Canadian in debt, which we knew at the worst we could carry and carry forward anyway and sustain the cost of that if we had to. But we're working on ways we might reallocate that. Fortunately, the note holders also is voting in favor of the transaction. We were hoping they might take shares for debt, but wasn't their interest, so that's fine. But we'll carry that through. We still have the money for carrying forward both plans and all our operations.
And then, just generally, can you describe your discipline in general acquisition strategy? What do you look for if there was something tomorrow? What would you what makes it?
We have more. I like I said, it goes back to good old Wayne Gretzky and his comment about where the puck will go. Is that these are jurisdictions that people aren't in. Like northern New Brunswick is a new play. It intrigued me. Not only is it geologically wise, it shows very similar to IOCG deposits, and that's just a new buzzword you're hearing in Canada, and they should very much be here. But the big ones are monster deposits you'll see in Australia, and again, that suture zone. So from a technical geologist point of view, I'm looking for world type of things where the world looked 400 million years ago. I look at an area on the other side. Why California? Because mines shut down, as I said, in World War II and never started again at 20 cents gold. So that's what I'm looking at, is this type of thing. There's still a lot of low-hanging fruit. And these are things that the big companies will not look at. I've worked for the big companies. I worked for Rio Tinto. I worked for Inco, and it became Vale. And I know they will turn their nose up at something 250,000, 500,000 ounces. They won't, even if they'll talk themselves out of it. And I grew up in the era where the armies of geologists that worked for the big companies, and the Kaminkos and the Techs, all got canned about in the 1980s. And they had kept one or two guys, and all they do now is absorb each other in smaller projects. So we'll put ourselves in a space either where we're really super attractive to be taken out down the road, or we become the next, I've said to my guys with the tongue in cheek, it'd be fun to become the next Barrick or the next Newmont. We're geologists and miners, and these fellows that started these companies up were not technical people. So if they can do it, these opportunities are there. But cheap, low value, under the radar, and things that the big guys aren't looking for.
Okay. How similar are your observed mineralizations at Golden Culvert to the close by Seabridge Gold's KSM property?
Yeah, very, very similar in a lot of ways. These are we're on the Three Aces is on a fold nose, so rocks crumpled and folded, and it's the same rocks that you're going to see stretched all the way down from Alaska down to the tip of South America. It's the Cordillera basically, and these are called orogenic deposits. But they're on a fold of a nose, and they're tilted over this way, and we're in a separate fold over here. Now, what's intriguing is that I'm going to get geology on you, sorry, but it's a really important point. Strategically, they're in a rock unit called the UCG, and the UCG is a much older rock unit, and it sits on a fold nose down deep, and we're up in the Vampire Formation, much higher. So a lot of sedimentation has happened. Something like that, these veins came through, but we're sitting up probably a kilometer or more in the stratigraphic column over to the east of where they are in a different fold nose. And we've got high grade gold in there, and they've got high grade gold. And they're, if I took the fold axis to fold axis, we're about 1.5 kilometers apart. So we're looking at 3 aces down underneath us, and it might well be 3 aces has been the Golden Culvert was eroded away and ended up as placer gold in the streams. So rock age and so on, very similar, and yet it's very similar grades. And I know they struggled a bit with their structure with trying to figure it out, but what I liked about ours, it's very straightforward. We have a fold nose, and typically these orogenic deposits will go right up the axis. You see the same kind of deposits in Nova Scotia. The Maguma is very similar, and Fosterville in Australia is another example of these type of deposits. And some of them are very, very rich and very deep, and you just got to keep working, and that's what we're working on up there.
What will the pro forma primary and fully diluted share count be post-merger?
Yeah, well, like I said, we're taking on a 65 million plus shares, plus change in shares. So we'll be about 154 million shares outstanding. We're trading about 20 cents, so we should be in around the 20-some million market cap. I told you that if the market catches wind of where we are and compares us to peers that have the same ounces on the books, the same set of projects coming forward, the same kind of team, the same cash, and most importantly at the back, look who's financed this in the past, and see where the support's coming from. If you put all that together and match us up, and I compared when I did my research and tried to see where we should be, where Monarch got taken out by Yamana, and shoot, the other names forget, but there's about 4 of them anyway. Sorry, that escapes my mind. But your investors should do that and see how we stack up. And those guys were in around the 100 million over a market cap. So that's where we want to go. It's the market will decide that, but we just got to do our work and make awareness happen, and either they, hopefully that follows.
Any idea when you might be drilling in California?
We've been talking about that. I'm a little frustrated because we can't really do anything till we close the acquisition, which will be the end of June. And because I can't go out there, COVID's another part of it, but I've got to go down right off the bat and talk to people down there. Now, I wanted to comment that we've got our due diligence team I'm extremely impressed with. We have a fellow, a long associate of mine. He's run mining companies. He's an American, and he plugged in at least one other guy that fellow down there who's a very capable geologist that's down there already, and one guy that's I won't mention their names not to embarrass them, but he's permitted other gold mines down in California, and he's a top-notch guy to have on our team, and these guys are working with us. So we know the permitting side, we got that pretty much understood, and the resource we're very comfortable with. But yeah, drilling would be something we'd want to do. Just can't get on that until we're formally, it's in our hands with the new owners.
So to that point, I guess a lot of we'll see in the coming weeks and months, but as best you could answer, how might you order your project advancement, the Canadian assets versus California? Is this a kind of a work in progress? What would you?
No, this is a very fun question because this has been well thought out. All we've been looking for is the right thing to pop in, but in our mindset it was always, what could you get into production in a modest way with the least amount of capital outlay? And that's what, similar to that is what we're looking at the micro mining project in New Brunswick with a copper property. But the same thing here, there's a heap leach component to the Fremont that was never really evaluated by the former team. And it's the obvious thing to do. And we would start off with a small scale, 50, 100,000 ton. We tossed that out to our team to see what would require to get that permitted. And that could possibly be done in a year and a half, maybe, and hopefully less. Again, it's small scale. It doesn't, it's not a huge, big mega project, very disruptive and disturbing for people in the local community. And it's a test. So we would do that, and that could generate some cash flow very quickly. And then we expand out once we see how that works. And maybe as we go, we might expand out to a larger heap leach. It's said that 10% of the resource is oxide heap leachable, which is roughly about a little over 1 million tons. So that's our first phase. We've done a cash flow model internally. It needs to be detailed. But the first step of that would be this small scale one, expand out to a larger heap leach. The bigger component of the deposit is sulfide related. It is refractory. It will be taking a concentrate and shipping it. And there's various places we can do that. So we looked at that, and also what I really liked about it is it's looked at as an open pit. And I'm an underground dude, and I've done lots of open pit, but you don't have to go open pit full scale. The other thing that really works here, I see, is these big widths, 200-300 feet wide, running around 2 grams. This could be an ideal, if you're getting technical again, block cave, sublevel cave. That's my end. I've done those kind of deposits. They're very cheap. They're almost as cheap as open pit, and you can do that underground. So again, we see this as a long-term life of a 4-stage process of various really sensible methods of very low cap in the beginning, very low risk, very low tech, and then getting more technical as you go deeper.
Thanks.
That could take over the course of 2 to 3 years, of course, to get all that fleshed out. But certainly we could start off simple, easy, and the least amount of aggravation and concern for locals.
Thanks for the presentation, Kim. If you could discuss some of your shareholders, and I know some of your larger ones have been shareholders for a while and quite supportive.
We've had a group come in the beginning. I won't use their name because they probably, in the very beginning, it financed us $1 million when we got started, and that got us going. And they're still holding on there. I'll hold off because I haven't asked them to use their name, but they're a well-known banking house, and they stayed with us. Subsequent to that, the next group that came in was Jarrett Canyon Canada, which owned the Jarrett Canyon mine and it still does, I believe, in Nevada. And the recent acquisition happened, just closed, I think, a couple of weeks ago. The First Majestic Silver acquired them, similar kind of thing. It was a private mining company, and originally I think Eric Sprott owned 100% of Jarrett Canyon. Now that's all owned now by First Majestic. And I've been in contact with them, and they're happy with what's happened. They got in very cheap, and they in the end, and they're very supportive of what we're doing. So that's been good. And subsequent to that, we've had a lot of funding come into the States. So that's Coast Capital, and they've significantly put in their they picked up about 17.5 million shares, and they own, I think, another 6.5 million warrants on top of it. So they've been pretty supportive, and they've been in every financing done as well too on our side. We have others, the groups that there's a cluster of fairly well-off group in Calgary. They've been with the company since 1980s, and when it was an oil company, and they stayed true to us all along and supportive as well. And they're about 7% of us as well. Management owns about 3%. I own over 1.5 million shares myself.
All right, thanks for that. And then you kind of touched on this before, but if you could just elaborate on the COVID restrictions, travel restrictions, and how that's impacted, the due diligence in California. You've obviously have to rely on people down there. Locally.
Yeah, I didn't go down myself, but the one fellow that we'd worked with before, that was the permitting fellow. I'd worked with him before, so I got a lot of respect for him, and also the other long-term consultant we had working with us. So full trust down there, and that went well. It would have liked to go down there myself for certain, but didn't get to this time. However, I had been in California looking at another project a few 30, 40 kilometers away in 2019. So I did know the lay of the land, and I understood how things will work down there. So that was fine. Yep. Other than that, COVID hasn't really, makes it a little bit funky, but even in our Yukon project, they have if you come out of province, you have to put in a plan to work up there. We were successful with it last year. We try to hire as many people in the jurisdiction possible, and that's our plan going forward again this year. I'm hoping that, who knows how it's going to roll out. I get my second vaccination in August, so after that, I'm pretty clear to go wherever I want personally. But I would hope that within the year we're over through this and people are back doing business normally again.
Yep, fair enough. And then is there going to be changes at the board level or management team level post?
Yep, we have. We're working on that, but certainly part of the arrangement was that we will be taking on 2 directors from the California Gold team. I'm not going to give anything else up yet because it's still.
Yeah. Can you say which directors they will be? Or?
No, I won't, because that would be not without their permission at the moment. So I won't. I do know. We do know, but it's not fair to them that I give their names up.
No worries. If you could discuss the stage of permitting in California and what's in place already and what further steps would need to be achieved.
The permitting will have to be picked up where it got dropped off. The permitting as it stood was nothing more than drilling programs.
Mm-hmm.
And again, one of the fellows that went down on the due diligence I brought on board had worked for a forerunner. He worked with Upper Canada Gold, I think it was, that picked it off, which evolved into California Gold and left the company at a point. But he was involved in the permitting back then, and we're very grateful and happy to have him with us because he's done a lot of the groundwork with building relationships in the Mariposa County. So that's my job coming up to do that, go down there and gain the trust of everybody down there and talk about who we are and what we're going to do and get that permitting going. But at the moment it stands no more than, and I don't think those drill permits are valid right now, so we'll have to renew those. They aren't onerous. It's just stuff like anywhere. They're probably no worse than anywhere I've been. They aren't a 10-year permit, unfortunately, but they're reasonable to do. So we can do that. That's the drilling component. The rest of it, we definitely have a plan in mind of where we want to go with the small scale mining and build it out. And as I said, that and our experts have told us that you could probably look at a small scale thing a year and a half, and build out to a larger as you're going, build out to a larger one 2 to 3 years, a larger heap leach, and then after that it'll be as our plans grow, you understand more, we build out from there. So it's a build out from small. I'll quickly say this because I say it every time. I am not part of the belief of the go big or go home. That's been disaster for lots. Every major company's going to try to go big with $1 billion market cap, and listening to the big bankers that want to get their 5-8% clip. And I said, that's not what we're going to do. If you go big, you may not have a home to go to. So we're going to start off small and build confidence in what we're doing and build our team as we go forward.
Yep. Okay. And have you guys given much thought to how to approach advancing California projects versus previous ownership?
Well, yeah, I'll say it. We're not going to get involved in cannabis or hemp. We're sticking to our knitting. We're miners, and we see a terrific asset here, and it's going to focus purely on. I've already gone through the plan probably 3 or 4 times here, but we're going to focus purely on building ounces, which I think are going to be. You saw that long section. I think that should be a duck shoot there, shooting in a barrel of fish. But moving quickly as we can to understand what problems there may be in permitting and building a mine and going forward. Equinox has already shown how to get there and can do it successfully. Well, we should be able to do it too and follow the steps. So that's our plan.
All right, thanks for that. And are there any royalties on the California properties?
Yes, there are royalties, and 2% royalty.
Yeah, okay. Any possibility to buy that back, or is it from the original landowner?
Yeah, and I'm just drawing a blank, and I don't know why. That should be something I know like the flat back of my hand, but I think that's possible.
Yep, okay, no worries. Thanks for that. I'll pass it on to our new colleague, Adam, who is a sell-side research analyst. You're on mute, Adam.
Yep, just working. Thanks. Sorry. Kim, can you just go over quickly the conceptual plans you have for the initial open pit heap leach idea for your acquisition in California, and talk about the permits just needed to for the initial open pit heap leach, small tonnage that you had in mind?
Yeah, I can't go through the details of the permitting process because they're more the fellow we brought on board is more in touch with them than I am, and the team is, and I've been focusing on everything else, just getting the feedback on it. But yeah, the idea is, like I said, a small scale. We'll have to get a bit of, when I get on there, we need feedback from the regulators directly to understand what you can and can't do in that realm, and that's part of it. And it'll be, again, a get to know meet and greet type of thing. But yeah, the notional idea is a small. I picked 50,000 tons because we ran it through a cash flow model. It might be 20 or 30, it might be 100. I'm not sure what we'll do. But the idea is that we got something that goes into production and earns actually positive free cash flow in 6 months. and by way of a heap leach, which is a very inexpensive, cheap way to do it, and prove not only just the economics. We want to prove to the local community and the industry and the world in general that we're going to do this in a very clean way. We're going to demonstrate that we're going to do it in a way that reclaims things and it's going to not leave a disaster behind. That's very important. The mining industry is up against its wall against proving that it can do these things, and continually there's hiccups in the industry. We got to do this better than what people expect. So that's part of going small and keeping our team small too. We don't want to hire 100 to 500 people right off the bat, and then things go off the rails and suddenly you're laying them off. That's not where we're going to go. So that's the concept of getting it started. But it is going to be bootstrap for a larger thing if that's successful, and if we can decide as we go and see how our permitting evolves. But if we're able to keep on rolling, well, we might do that. But if it might take a year to sit back and find out what the results are, we can do that too. We want to make sure whatever we do has flexibility. We want to make sure as we go into the future, if the gold price dives, we're able to shrink down. And again, my Pamour experience, a throwback there, Pamour was the lowest grade underground mine, I think, in the world, certainly North America, and I was privileged to work there. And it was a hard scrabble operation. And we were mining 1.5 gram, 2 gram material underground. So that's, that was not easy to do. And it was done from several different ways of doing it. So a combination of different mining methods. And that's the learning I got. And some of the team are ex-Pamour people. So we were able to take that and learn how we can be flexible, be agile, and shrink down when you have to, and don't go too big and stick your neck out on debt and things like that. So we've learned those lessons.
And Kim, is the California asset, is that all on patented ground?
No, it's not.
And what ground is it on?
You know what? That's a question I'm going to have to get back to you on, and I think I should know that. Patented ground it's privately owned ground anyway, but in Canada we call it patented, but in the States it's private and it's different rules. Privately owned. We generally call it patented in the U.S. if it's privately owned. If you own it. I'm thinking patented in Canada, which is a different thing, but sort of the same.
And Kim, can you just repeat? I missed it when you were saying that there's or I interpreted it. You saying there's a wide, low grade halo underground that you consider a bulk mining method for. Could you just give us that what you were talking about?
Yeah, I certainly am not going to give you tons and grade on it, but we did root through. I've gone through all the sections, and I'm a resource modeler. Is more my background as a chief mine geologist, so I have my own software. But I threw all the data in there and looked at it, and you could see that although they report a low grade one, which suits perfect with pit, and RPA did the work. I don't have no argument about it, but you can jack up your cutoff, and I could see that could be done and get very broad zones. You got a hanging wall, footwall veins that were mined in the past. One old mine mined the footwall, and the other one mined the hanging wall, and they finally connected, but not as one company. So we saw that in between all this low grade that the previous more recent work had shown in the 43-101 was for a pit. These guys are mining near quarter ounce stuff in the past and historically. Now, this is the same thing I saw at Pamour and Timmins, and you're seeing it various places now. Old mines are getting a new life. Hollinger's the one in Timmins as well, where these guys are mining quarter ounce material at the time when gold was $20, $30 an ounce. And subsequently go in at where gold prices are now, you can see all this low grade stuff sitting in the wall rock, and that's the same thing. So there would have been two veins in Fremont, and they're sort of like this, but as these veins or as these structures move and shift, you get extension veins in between. So they're seeing the same thing where there's vein material in here, but also penetrating into the wall rock would be sulfide mineralization that's carrying gold with it as well. So it was a matter of me going through and just quickly highlighting anything better than a gram underground, seeing, or half a gram underground, what does that get you? And it was averaging in, for me, somewhere between 2.5 grams from here to here. But that's me eyeballing without doing a resource estimate, so you want to be careful there. But clearly, push the cutoff up. How many tons do you lose, and what's the grade do? And if you're going to go sub-level cave or something like that, you can get in around 2 grams, 1.5 grams. We did it at Pamour, but and that's what we're looking at for in there.
Mm-hmm. And obviously, that would require probably a pretty big mill, if all that, all that rock needs to be concentrated.
Absolutely. but in its time, when it's appropriate. Initially, you can do a lot with heap leach. We can do a lot with shipping concentrate out. We can go. The other thing I like about you asked this question earlier. The perfect deposit to me has got optionality for both high grade and low grade. So the thing here again, if gold prices tank, we can shrink back. And Pamour had the same thing. We were able to shrink back on production wise, but make quality ounces come out. And that's, you still got those veins. And remember the long section where they mined very shallow on the south portion, and then very deep on that one mine to the Pine Tree, I believe it was. There's all that ground in between, and some of those results, the chip results, are still very high grade. So there's the opportunity here to start an underground as well that might be high grade. And the idea is building cash flow in the company without having to raise money or borrow it, and build outwards. And there's the opportunity to build it outwards. And multi-phase, multi-pass mining can be done too. You can go in with high grade, low tonnage, and build out and build a bigger mill within time.
So they had a sulfide mill on site at the time this was operating?
I believe so. What we're seeing is, I would suggest this: they were probably mining narrow vein gold in quartz veins, and it was probably a lot more free gold. And that what we're looking at here is a heck of a lot more sulfide related gold, and that's what you're seeing in the in this 1.7 gram per ton indicated resource. Is they're picking off that. Now it's the same. I wouldn't say it's the same. We had kind of different in that regard. We had much more of it was free milling gold. So I'm sure they're going out. There's free milling gold here too. That's one of the things we have to. I mean, the evidence is in the past mining. Most of that would have been free milling gold, I believe. Some of it would have been sulfide, but would happen. And a lot of those records from the 1850s aren't around, so it's really hard to say what transpired there. But we're looking at it from modern stuff, and we'll have to go do some more metallurgical work as well too.
Mm-hmm. Yeah, I was going to ask you about the metallurgical work that's been done so far. Is it mostly just been sort of what's the floatability of the underground ore?
Yeah, pretty much. And the one thing I was disappointed is, I shouldn't say disappointed, it's an opportunity to see, is that really wasn't established how much of the deposit is oxide related, and that wasn't determined in terms of how they modeled the ore resource. And that was my first thought: we got to do that. So we got to go back and do some stuff to get these answers for us. Yeah.
And I presume you sort of, at least first pass, think about the underground. Just pretend it's all sulfide. Set up a gravity circuit, ahead of your flotation mill. So you try to get everything, because you don't know exactly how much free gold you're going to get. So you want to just set that up right before your mill.
Exactly. And that again, in a lot of cases, my background is more mining, and I think metallurgical mapping is one thing that's being done not often enough, but you've got to really model your domains geologically around how you're going to process it. And that wasn't done to that extent. It was done kind of, like broad brush. But clearly, I'm looking at options, and I've just said a lot of stuff here that's forward-looking statements. So there's stuff we're looking at these as opportunities. There's no certainty around the fact of what I've discussed, but certainly the history shows narrow vein mining was done, and selective mining was done, going after free gold. It's there, and we can do that. But we need to sort this out as we go forward, and learn as we go, because the complexities are going to come forward, and particularly, as you said, there's a component of this that'll be free milling, there's a component that's going to be heap leach, and there's a component that's going to be sulfide related. So we got to sort that out. But on the whole, the gold appears to be there, so we'll work it out.
Do you have any, so talking about how you're going to work it out, Kim, so do you have an idea in your head about, how many feet you're going to be, drilling per year, or how many meters you're going to be drilling per year to start to get this really defined up as you'd like it?
No, I don't yet, and that'll be fun, because my hands are full right now. I'm planning out the drill program for a Yukon project, and I'm planning out our small micro copper-cobalt property in New Brunswick. I want to get that on the track. I need to hire people. That's another thing we got to do. We're a small team, but we got to bring people in, and we got to close this deal. So there's only so much time in the day and so much to do, but no, I want to, and I love to, and I'm trying to. I have to push that out of the way. Right now, I'm signing up documents to go with annual general information circulars for both companies, and and AGMs, and that's my life over the weekend and last week, and will be for the next few weeks until we can get into the really fun stuff I want to do, which is answering your question.
Let me pass it on to Erdi, and then maybe we'll come back if we have more time.
Okay.
Thank you. What will be per ounce acquisition cost for the California project for the gold in the ground?
Well, it's all shares, and if you equate our shares at the time we announced it was around 20 cents for 65 million. I think that comes out to about 14 million Canadian. Yeah, Canadian. And we put that around $19 and some, I don't remember the number right now, it's somewhere, but because I've looked at millions of numbers lately, but it's around $19 an ounce acquisition, but all shares. There's going to be other costs, there's fees and things like that, I understand, but just purely on the basis of the share exchange, it comes to around $19.30 or something like that an ounce. And again, I stacked this up against what Monarch did, and I still can't remember the other companies. TMAC was one of them I compared to, and they were anywhere from 155 to $70 an ounce. So I thought we didn't do such a bad deal. My quick comment on that: when the deal came through, there's people questioning, well, you just paid 100% premium. And I said, yeah, so what? I said, we're two minnows at the bottom of the pond. We're trading for pennies. We're both undervalued, and put together we should be a heck of a lot more. But individually, it was that 100% mark shifted from 60% to 100% on the basis of a 1 or 2 penny trade per day. So that really didn't matter much. But some people thought that was strange, and I said, well, no, it doesn't really matter. What matters to me mostly is the question you just asked. What was the on a cost per ounce basis on the 800? Inferred and indicated, noted. But that's about what it came out to.
Thank you. And what will be the ideal grade tonnage model for this orogenic gold at Yukon? When we look at the grades encountered so far, can you compare us the average grade you have within the drill holes and the average grade around the world for this type of gold deposit?
Well, I'm going to be there's a target I'm going for, but I'm going to be very cautious about it. We are working on getting a resource done. I've done one in-house myself personally, and it gave us a target potential that gave us comfort going into the drill program last year. We're looking at using, it's going to be pretty straightforward, the same kind of cutoffs you'd use anywhere. 1.5 grams tip of cutoff. We're looking at 6.5, 7 grams is what we're looking for minimum, or whatever we can get in that range. So that's what we're looking for an underground, but we're also looking open pit. So I use the same cutoffs and costs that you'd use in any other project. And magic, when you use those cutoffs, and you're going to get a number that mathematically tell you what you should be looking for. So we're going to be looking at 1.5 grams, 2 gram open pit. That's what we're looking for, and we're looking at 6.5 or better for underground. Again, there might be places that are higher grade. You can see the results there are, and there are places that are lower grade. But that's just the nature of how we model it.
Thank you. Campbell?
Sure. A few more that have been sent in, and then Adam, you mentioned you might have 1 or 2, and we'll try and wrap up in 10 minutes on the dot. Going back to Bathurst, what would you envision production rate, capex? I mean, anything that you can say that.
Yeah, it's not firmed out yet, and we're working on it. It's kind of a back burner story, but I've done this kind of a thing. Again, Pamela lived a lot on custom milling other people's products, and I've done custom milling myself, small mini projects where we've made money doing that before. The nickel company I worked with, we did that too, and looked at it many times. Looking at an outlay of, my target of what I want to do is an outlay of $1.5 million that generates $3 or $4 million. And that's done in 6 months.
Going to McIntyre,
50, 100,000 tons. That's what I'm looking at in Captain, for instance. That's the one that's probably the one we're looking at. There's lots to do. There's no certainty around it. I got to find that we've been approached by people that are willing to buy concentrates and direct ship ore. But we have work to do. We got more metallurgical work to do. We got to design a mine, and we got to get it permitted, and there's all these things have to be done. But that's the goal we'd like to get out, or we like to go with it.
Going to McIntyre, oxide, copper, gold. Does that mean open pit heap leach?
At the moment, I'm not sure. It's certainly in the neighborhood. Neighbors are getting 100 gram per ton gold material in what looks like narrow vein stuff, but it's still really early. The IOCG, I went to the property and looked, and I could see that you've got definitely hematite in a breccia package and a rhyolite. I'm being geology here, but that's what you want to find, with 40 some odd samples that were all economic grade, so to speak, up to I think I can't put the top grade on it. We did a couple of drill holes really early there. We still don't know what we've got, and the soil sampling. We're gonna get those results out and find what we've got. And this summer, I hope to be back in there, tracking down some of those anomalies we got to find more strike. What's the width? What does this thing look like? It looks like it could be anything from an IOCG. It may be small scale, or it could be standard, narrow vein type breccia thing. I think I'm trying to remember our drill holes. We got 1.5 grams in the 2 holes we did over 20 meters down the hole, and I think 5 grams over 1.5 meters, something of that nature, within those zones. So only 2 holes ever drilled in the area. So I mean, it's very early there. Again, I'm going to say there's only 2 juniors working out there. It's a sleeper for anybody, but it's got gold all over the place. Just a matter of where is it concentrated and where is it economic, and what does it look like? And it's just early for us.
Going over back to Fremont, in California, any old tailings you need to deal with?
Yeah, those tailings are not even considered because we checked on that. That was important to us. That's not considered a liability by anybody. It goes back. The mine started in 1848, so there you go. It's the beginning of the California gold rush. But we've been out looking at them, and we feel that those can be taken, reprocessed, cleaned up even further, and part of the plan to tidy up what's already there and clean it up and go. So we don't know a lot. We just did some surface sampling and said, hey, there's still gold in here, guys, and nobody's really taken a look at this before. So we're certainly going to look at all those opportunities you've got.
And assuming everything goes through and as planned, when would you expect to publish a feasibility report? Yeah, people are asking.
I don't know. Oh my God.
Yeah, but if you had to pick a year and a quarter, maybe.
No, I couldn't do that at all. I'm sorry, I couldn't answer that one. We got to look at each step in front of us. Right, we're taking baby steps right now. That's way too in the future. I do plan. I'll say this much. The next steps for us. Well, there's probably 2 or 3 dozen drill holes drilled, and they're in the press releases that California Gold did on the Queen specimen. I pointed that's quite a ways to the north and no drilling in between. That was intended to go into a new 43-101, but it never did, and we plan to review that. And I've looked at the drilling, but I just haven't had the time to package it up. But that would be one thing we would look at doing in the next 12 months, year and a half, is a new 43-101. It would include more drilling though. We'd want to get in to do some drilling. If I was to give you a quick idea what we plan to do out there next, we certainly want to get some drilling done and get some comfort around, is there more than 1 million ounces there? That would be one thing. Do an updated 43-101 resource estimate. That's the next logical step. Work on the permitting, of course. Get that. That's a long lead item, so get on it fast. But start with something that's going to be palatable for everybody, like I said. So that's kind of our plans. More metallurgical work. I discussed that too. That's what we see. We're near feasibility yet. That's a long ways out, but
I know.
What comes first is all the work that's involved in it.
Your audience is excited for you, so.
Oh, good.
Adam, one question, and then we'll close.
Sure, thanks, Kim. So just again back to Fremont and this idea of reprocessing the tailings. I don't know what the tonnage of the tailings is, but is your thought there? Well, let's wait till we have a gravity and a float mill set up before you do that. You think it's all free gold that's sitting in the tailings?
I would say
get it easily without building a full float mill.
I would say it's very unlikely to be free gold in there at all. That's what they took out back in the day. It started in 1848, shut down in 1944, and they made money. And I would think that they took the free gold component out, whatever that means, from narrow vein stuff. I mentioned this earlier, and I don't know. I don't know more. I'm dying to find out more myself and be more comfortable with answering those questions, but I can't do much more than that right now. But I would think what's left is going to be the refractory type stuff that's less amenable to leaching. And we need to test that, and we need to get an idea how much there is. It's easy to figure out how many tons are mined out of it, and that's probably the number that's tailings sitting around. But we'll have to understand what that is. I mean, I come from a place where I've got some very good colleagues that are experts in paste fill, by the way, and that's a perfect use for getting rid of tailings. See, there's value in a lot of the things I said earlier on cleaning up and being good with the environment, taking away those things that aren't now perceived as a liability because they're so historic, but we could clean that up anyway and push that stuff back underground where it belongs, much cleaner than it is sitting there now. So that's part of what we do. But these are forward-looking things. I can't say that enough. Just stuff we want to dig into and find out. We don't know all the answers. We don't know them. We just know that they've been sampled recently in the last month, and that there's value in there of some sort.
Well, Kim, remember, back in the 1800s, they had limited crushing technology, so there's a good chance, that there could be quite a bit of free gold in there, and they certainly weren't heap leaching it.
No.
So, another potential opportunity for you.
Well, exactly, and the fact it's been sitting there for nearly 100 years, some of that stuff, it may well be oxidized and perfect for heap leaching too. We don't know that yet, but good point, and we've been thinking about that, and sometimes I wake up thinking of stuff like that. And I'm going to be a bit of a smart aleck here because I don't remember 1848 very well. I'm not that old. Sorry about that. That's a corny joke, but anyway, yeah, no, those are good points. We see little things like that can value added. That by purely doing the right thing, we can make some cash out of this too. Things forward.
Thanks, Adam. We're going to close now. Thank you, everyone, for tuning in. Replay at amvestcapital.com/replays in about an hour. And Kim, I'll let you close, and always ask why buy now?
Well, I've been saying this all along. Amongst other things, we were talking about rebranding, and we've always felt of ourselves as a bit of a dark horse that nobody really knows who Stratabound is. We're under the radar of a lot. We're just starting our marketing now. It's been our plan to get in here. And I'll say quickly, I left a good consulting job and having worked for big companies before, and took a year and said if I have to, I'll pay myself, live off my own life savings on the Golden Culvert alone. I wanted to join into a sorry looking junior down on its knees that we're going for pennies and build that into a company that's going to be worth something. It's taken some time, but we've worked that along with Golden Culvert and McIntyre Brook, and now and the plan all along for a long time was to get a property such as Fremont in that we could really go. But people don't know who we are. The market's been looking anywhere but gold resource companies anyway. We've suffered through the cannabis thing, and gosh knows where everybody's gone now. But sooner or later, we see this thing happening with all the metals besides gold, and sooner or later, people are going to recognize that there's something. This team's got perseverance. They stick to it and they keep going, and that's what we've been doing. We're still here 3 years later, still standing, and we plan to build, and we've got that what's the word I'm struggling for here? We've got the momentum behind us right now. So I would say now's a good time, because I don't think we're going to sit at 17 and 20 cents for too long.
Thank you, everyone. And please share your feedback on the way out. Bye.
Thanks.
Thank you.